And Yahoo, as you know, is in the news this morning after the reports that the firm could, in fact, be taken over. Joining us this morning is Brian Pitz. He's the executive director and team leader of the communications sector at UBS Securities. Brian, nice for you to join us. And just listening to what Larry Haverty is saying, he's still got his money bet that Microsoft will take over Yahoo. What do you make of that?
Good morning. Well, I think there's a lot of different things on the table right now with respect to Yahoo. I mean, we actually think the most likely scenario could be a combination with AOL. I think there's a lot of synergies on the top line that could occur, and clearly a ton of synergies on the cost line as well. Basically these companies are competing with Facebook and other social media companies for display-based advertising, and they're just starting to lose a lot of share. So maybe Microsoft, but I think they had their day a couple years ago. Right.
Yeah. Well, yeah. Less than a year. Yeah, they had their time for that. But however, you match one struggling company, Yahoo, with another struggling company, AOL, and you wonder if you're really going to get a non-struggling company, essentially, Brian. When you say that there's good synergies, tell me how exactly AOL is going to be able to unlock the potential.
Well, I think AOL gets a bad rap. I think they have a lot of great properties, things like Spinner, things like Patch. It's not just the AOL.com platform. And I think by combining with Yahoo, they would be able to actually get rid of their dial-up assets, spin those off, and actually have a profitable base of advertising. Basically, there's a lot of Salesforce synergies as well that I think could go away, more so than even with a Microsoft combination. So, I don't disagree with you. Both companies have been challenged for a very long period of time.
Right.
But I think this is a game of scale, and I think putting these two companies together would clearly give both of them much better scale than they each have individually.
And Brian, in the pre-market, I mean, Yahoo's up right now about 10%, was about 16% a little bit earlier this morning. What kind of premium do you think any company would come in with for Yahoo?
Tough to say. I mean, we have a note out today. We think a $22 to $24 range, that would be like a 40 to 60% premium. Again, it's tough to say what private equity consortium can come in and pay that type of a price, or anyone for that matter. Clearly Microsoft has the biggest balance sheet, but again, that's been around the block before.
Right. Right. Okay. So leading from that, then, Brian, which of course any type of deal for Yahoo is going to affect the competitors, including Google, if it's not Google coming in. For the earnings itself, for Google later today, what are you really going to be watching for?
Sure. We're going to be watching for accelerating revenue growth. I think there's a lot of key drivers on the top line that are going to drive Google this quarter. One being just better monetization driven by Google Instant. Google Instant is having a real material benefit to the numbers. If you looked at recent ComScore data, you're seeing definitely a push. Just general share gains as well. This is a company that hasn't really increased shares substantially for some time. And we saw pretty dramatic increases in share, but also things like product search, a little less obvious to the average person using Google. Google is really making huge strides in what they're doing on the product side.
You mean like you're talking about searching? Like you mean like against Amazon, that type of thing?
To some extent, yeah. More against the traditional shopping comparison sites. I think Google's taking a lot of share from those companies. Amazon's still a great company that's taking a lot of share as well, in the e-commerce space.
Okay. All right, Brian. Appreciate it. Thank you so much for your perspective. Brian Pitz of UBS Securities on both Yahoo and also Google.